right, everyone, welcome back to the channel. Thank you for tuning in to another video. Today's topic, we're going to be kind of just generally speaking about technical analysis, and hopefully most of you know what it is. It's simply just being able to, it's the craft of being able to read the chart, all right? Understanding the direction, the movement of the market. Is it moving to the upside or to the downside, okay? Now, there are multiple variations depicting or depending on the say time frame or time-based charts you may use. Okay, some people may use tick-based charts or volume-based, time-based. For like me, I use range-based, and all of them are different in how they're calculated according to a price movement. But you must understand one thing, and that is being able to read. Now, you hear me lots of times talk about what? Structure of the market. Now that is very imperative and very important if you're trying to be successful and you want to make and have consistent trades on a daily basis. All right, so simply put, I'm just going to show you, if you want to get just a general idea of what technical analysis is, I'm going to show you a good site you can go to, investopedia.com. As you see here, it goes in detail about what technical analysis is. It breaks it down. It covers it. And that's going into, it doesn't matter what term, all right, surrounding trading. You can simply go to Investopedia, type it in, whether it's supply and demand, market structure, price action, whatever it is that you're trying to grasp an understanding in reference to the term itself. Look it up on Investopedia. They'll give you the best rundown, the best definition, so that you can gather an understanding. All right. Most traders are talking in general terms. Like right here, we see technical analysis is just a method of analyzing, predicting the stock markets based on past market data, primarily price and volume, right? So basically just being able to read the charts and study the historical market data, all right? Whether that's going back a week at a time, all right, a month at a time, a year. We're just trying to get a general idea of historical movements of the market, whether it's, regardless of the market you trade, okay? It could be Forex, it could be options, it could be futures, it could be stocks. It doesn't really matter. It's just being able to do your due diligence and homework to determine what is the market really trying to do. What do I see it doing? Is it bumping up against an area of resistance or support? Is it entering into a supply or demand zone? And that is the strategy and how I trade. So I talk about my own personal trading, my own personal experience, and how I trade here on this channel or platform that I'm using to express how I trade on a daily basis, the strategy I use. But again, this video is more so talking about the technical analysis, all right? And don't put so much emphasis on thinking that technical analysis is so complex, because it's not. Just think of trading, or when we talk about trading, in terms from a simplistic standpoint, okay? So let's move on, because I want to show some examples of what we look at in reference to the charts. Because technical analysis, the way I like to do it, I always talk about a top-down approach. That is using a higher base chart. I use a 60 range chart primarily as my higher base or my highest base chart. Sometimes I'll go a little further out, just depending. It could be a daily if I want to kind of see what the market is, doing on a longer term time frame or time-based chart, or I should say higher base chart, not time. When I speak of time, guys, I'm not talking about the 5 minute, the 1 hour, the 4 hour. I'm talking about in reference to what's higher than a 12 range, what's higher than a 24 range, what's higher than a 60 range, because I trade range-based charts. But just getting back to what I'm saying is that you just want to kind of look out to see, what is the weekly chart showing you, or maybe what is the daily chart showing you. But you have to really determine which charts you want to use. When I say that, if you're using range-based charts, what works best for you? You have to find your own little niche in the market, okay? Here on my channel and over on the Discord community. And by the way, if you're interested in joining the Discord, you can find the link down in the description portion of the video. It's free of charge. Invite yourself in. But getting back to what I was saying here, we have traders that are part of the Discord community. And, I trade using 60, the 24, and the 12 range chart primarily as my entry chart. Some people may use the 30 range chart. Some people may use the 15 range chart. Some people may just trade supply and demand using the time-based charts, okay, or tick or volume. It's whatever works for you. I always talk about stick with it, okay? But again, getting back to the topic of technical analysis, it's just being able to, we're going to look at a higher time frame. And one thing I do want to stress here and point out is that when it comes to taking a look at the markets, you got to understand this. A higher time frame chart may be trending to the upside, okay? But then you have a shift in the market where the market may be moving to the downside on a lower base chart. Why? Because if we're looking at our higher base charts, our higher time frame charts, yeah, of course the market could be moving to the upside because the swings are going to be bigger. The market is, making highs and higher lows if we're trending to the upside. So there could be a lot of variation of movement within one big swing on a higher time frame when the market is moving to the upside. Okay, but then on a lower time frame, so we move down to a lower base chart, we move down to a 12 range chart, there could be instances where the market looks like it's breaking structure back to the downside. So we got a trend direction or a reverse of a trend to the downside off of a lower base chart. And lots of times you'll see me, I could trade just off of my 12 range chart, only from a temporary standpoint, because if the market, I'm going to say this, is bullish, say for example, and we're moving to the upside, but then I can see setups to where I have opportunities to maybe take short. Some people will say that's trading against the grain. It is, but if you're good enough at doing so, you can even take short entries in a bullish market. People don't believe that, but you definitely can. It's called counter trend trading, but you have to be really good and have a keen eye to what you're looking at. Understand that. But I always would keep in the back of my mind the environment we're in. If we're in a bullish market, but my lower time frame is showing me setups in my if we're in a bullish market and my higher time frame it's showing me that we're moving to the upside, but my lower time frame is breaking to the downside, I can look for short setups only temporarily, okay, because I have to be mindful of what's going on a higher time frame chart. All right, so simply just looking at historical data, trying to figure out and analyzing the overall direction or shifts of the market to the upside or to the downside. All right, and then also incorporating core elements like support and resistance, where those areas at, supply and demand areas or zones. You want to be able to determine those locations as well. So just think about technical analysis in a nutshell. It's just giving you a heads up so that you're able to depict the direction of the market. And that's something you need to get right in most all instances before you even set yourself up, start looking for trade entries, okay? Again, it's being able to determine how is the market moving. Because the market can only really basically move three ways: to the upside, to the downside, or range, okay? Like yesterday, we saw primarily most of the day, especially on the NASDAQ 100, it was ranging, moving to the side, moving sideways. Can you trade environments like that? If you have experience and you know what you're doing, you can definitely do so, okay? The term supply and demand, okay, comes from looking for aggressive areas of buying and selling. And so what I'm trying to say there is that you can even do that when the market is ranging, okay? But you really, again, have to know what you're looking for and to understand when we're ranging, all right? Especially as scalpers, the opportunities of getting in and out of a trade, we have to really narrow our target profits down to be more precise of where to get out at, and take profit at, and also know where we need to place our hard stop set if you trade with stop losses. All right. Okay. So in a real-time environment, let's just take a look at my higher base chart right now. We're looking at the NASDAQ 100. Okay. We can see that it's been moving to the upside here before pulling back. So the structure or the direction of the market, and this is giving my rundown based on technical analysis of how I see things through my own goggles, through my own eyes. We started pushing breaking structure back to the downside here. So yeah, temporarily the market could have, even on a higher base chart, be moving lower. But then we start moving back to the upside after making this low right here. Back to the upside, it starts to take out internal areas or minor areas of structure back to the upside. Now, when it breaks above this area right here, I'm going to put a line right here. This area right here at 584, then my mindset starts to shift now because we broke through a major area of structure to the upside. So now I'm gearing up to start looking for opportunities to go long, because the market is now from where it was once bearish, okay, for not knowing how long, because no one knows when the market is going to shift, because it can reverse at any given point, but it moves lower and then it starts to move back to the upside, okay? So right now we're in bullish mode, okay? So my analysis and looking at the market is that every trade that I should be taking should be to the upside, right? Because we're breaking structure to the upside, okay? Each time we a swing to the upside on break structure. That's called a breaker structure, and we're moving to the upside. All right. And back at those areas where we see aggressive areas of buying and selling, say, for example, right here, I'm going to use this last major swing. Well, there's a swing here to the upside, but we're going to use this one. A push up here, a pullback, aggressive buying to the upside. All these bullish candles we see right here, thus aggressive buying to the upside, pullback, aggressive buying. So there is an area of demand right here, as well as there's an imbalance resting right here. So that would be considered a demand area or zone as well, aggressive buying. Now, the market is pulling back right now, right? So even on a higher base chart, we're still in bullish mode. We're still looking for opportunities to go long. It could be, I wouldn't consider this so much, even though the market can reject this area here, because this is what I like to talk about. Low probability zones, okay, ones that I really don't take interest in because the market has already tested pretty much and pulled back to this area of demand. I'm not saying the market cannot reject that area when it gets there, but the way I trade it, again, if you want to learn more about strategy, please watch the videos on the channel covering the supply and demand and the strategy and how I trade it. It's using multiple chart confluence and moving and marking zones from a higher time frame chart, and that could be the 60 range, that could be the 24 range, and then we move down to the lower time frame, say for instance a 12 range chart or whatever your lower time frame is or lower base chart is, and look for a rejection setup that I talk about when it comes to looking for confirmation to get into a trade. Trade should be taken on a lower time frame chart is the way I do it. I do not take my trades off higher base charts, and if you do, that's fine. Still with technical analysis, you want to be able to determine the overall direction of the market. Mark up your zones, whether you trade supply, demand, or support and resistance, and then look for rejection. So there are people who trade and are swing traders, so they'll look for use a higher base charts, whether it's a 1 hour chart or even a 4 hour chart, okay, or maybe a daily chart, all right, or maybe they trade straight off the 60 range, or maybe they trade off of again like a daily chart, or maybe something higher than a 60 range chart. It could be 120 a 20 range or 240, whatever it is. They're using something higher to look for pullbacks to either key areas of support and resistance or supply and demand. I strictly trade supply and demand only because I like to see, if you understand how the banks and the institutions what they're doing, when you see those quick bursts of movements in the market and prices gapping up pretty fast or gapping down pretty fast, that's called either supply or demand. Gapping up real fast, demand, gapping down real fast, supply. But what I want to show you right here is that, yes, right now I would be in bullish mode looking for opportunities to go long because we're moving to the upside. Now, here's the thing I want to show you. Just because we're moving to the upside, do you think that the market is trending to the or showing us something different on a lower time frame or lower base chart? Definitely could be. So there are opportunities to even take short entries because regardless, you might see something on a higher base chart here, like right here, we're bullish, right? Because it's breaking structure to the upside. But do you think the market looks exactly the same, showing us where the market is bullish on a lower base or lower time frame chart? Let's take a look here. All right, I'm going down to my 12 range chart. You see, this was that high right there that price made on the higher base chart. But look what it's doing now on a lower base chart or a lower time frame chart. Okay, maybe this be your 5-minute chart. I'm not saying that my 12 range chart is comparison to a 5 minute chart. I'm not saying that at all. All I'm trying to get you to understand is that even when we're looking at the structure of the market, okay, as it's moving to the upside, and we're in bullish activity, bullish mode. The trend, okay, price movement is pushing higher, and we should be looking for just opportunities to go long. That does not mean that we can't look for opportunities to go short. But again, be mindful. I do not recommend, if you're an inexperienced level trader, or beginner or new trader, to really focus in on taking scalps in a counter trend direction is what I'm trying to say. But you can if you have more experience and know what you're looking at. What I'm trying to get you to see is that even though we're trending to the upside, but on a lower time frame, now we're trending to the downside. So the lower base chart versus the higher base chart versus the lower base chart could look different. Moving to the upside on the higher base or higher time frame chart, but moving now to the downside on a lower base or lower time frame chart. All right. So where we were breaking structure to the upside on a higher base chart, look what we're doing now. We have broke structure here, push down, broke structure again. So we could be looking for pullbacks to key areas of supply on our lower time frame chart. It just hit an area of supply, well, maybe within one tick right here, but I still would count that because I talk about, in proximity. 2, 3, 4 ticks, whatever the case is, you know, the market could be approaching the zone. And look what it did. It came into that area within 1 tick. And we got the break and the close of the candle to the downside. Where's that aiming for? This area down here to fill the imbalances back to the downside. So again, even though we are moving to the upside on the higher base chart right here, I can still place emphasis if I'm solely looking for setups off of my lower time frame chart to go short. But I got to be mindful of what's below me, or what's below on a higher base chart. See, the market pushed up here, pulled back, broke structure to the upside. So more than likely it's going to come down and tap into and hit this area of resistance. Support. So that's another thing. Be mindful if you're looking for opportunities. Be mindful of support and resistance when you are looking for opportunities at key areas of supply or demand. The lower time frame, lower base chart here, we hit this area of supply right here. So I must understand what's below me. Where are there areas of support resting at? Well, we have support resting back down here. We have support sitting over here. But if I look at my higher base chart, there's support resting right here as well. Okay, and then right below this area, if it breaks through this area, well, there's support resting right here, okay, as well. So you have to understand, you know, what's taking place here. Now, if the market was to start to push back to the upside here, what would it be doing? I mean, some people like to draw trend lines. I'm not a trend line type person, but this could be, you know, taken as a trend line in the sense to the downside here, just to give you an idea that the market is moving lower. Okay, it really hasn't taken out and started re-breaking minor areas or internal areas of structure back to the upside. Now, this is a major area of structure if it breaks this up here. But when we break this to the upside here and then pull back and push higher, so maybe we do something like this right here and push higher, now we're starting to take our structure back to the upside. But we also have to be mindful of what's above us, and we have key areas of of resistance here, here, and back up to the top right here. All right. So we have to be mindful of areas of support and resistance, even though if we're looking to trade supply and demand. Okay. So if the market was to break back up to the upside and start taking structure out, would I be looking for a pullback to a key area of demand? Yeah. First and foremost, again, we're looking over at the higher time frame and we're already bullish. So if we start to re-break and take out minor areas of internal areas of structure back to the upside, and we get a nice pullback to a demand zone, okay, demand, we're bullish. I'm looking for longs already, and I'm trading in the direction of the higher time frame. This is where that confluence part comes together at. Understand that, okay? So, and we start to break minor areas back to the upside here, all right, and we pull back to a key area of demand. I'm going to be looking to go long, but I have to be mindful of key areas of resistance right above to where the market could actually, you know, stop it, reject, okay, pause at right here. All right, it hasn't taken this area out here, so here's one. That's resistance, resistance, resistance back to the top. So that's why a lot of people like to draw trend lines, because it not only does it allow them to show them once a trend line is actually broken, where they can possibly take a trade back up to pushing higher up to. It keeps them in line with support and resistance resting right above or below. But I don't trade trend lines. I can see this stuff with my own eyes. All right, I like to just kind of trade in channels in a sense. Well, I like to draw channels in a sense, not trade in a channel, but draw channels in a sense. I like to do it more so like this, so that you can visually see the channel. Okay, you can see the swings where it's low, lower, high, touch the lower end of the channel here to the downside, pull back, lower, high, lower, low. See how it's staying within the channel here? All right, so maybe to break the channel and go to the downside, and then it's moving even lower then. So, all right. So again, I just wanted to show you that there could be variations. I mean, the market could be moving to the upside on a higher base or higher time frame chart, but then it could look different, completely different on a lower base chart, even on the 24 range or the 12 range chart, because they are lower based charts. Okay, so if I go up to a higher base chart over the 60, I don't know, to something above that, you know, 120 or whatever the case is, it could look different. I mean, we may not even, well, let's take a look here at to say, for instance, the 60. More likely it's going to probably be to the upside here. But, you know, even on 120 range charts, for example, we could be looking bearish, but we could look, we could look bullish, but we could look bearish on a 60 range chart. So just try to stay in focus and in line with what you see going on your higher time frame or higher base chart, all right, when you're taking your trades, Understand? Now, lots of people also like to incorporate trading indicators when it comes to technical analysis to give them an even, I guess, a slightly better edge in the markets. Now, one thing about trading indicators, I do not primarily trade with them. Some people like to use the RSIs or MACDs, the ATRs or stochastics, things of that nature to kind of aid them in a trade. Now, I'm gonna say this: I don't think anybody should be solely taking the trades off of just 100% of what takes place with any particular indicator. Basing your trades on what you see going on in an indicator. If you want to be successful in trading, then learn market structure for one, and be able to read price action. But first and foremost, do your due diligence first to determine and give yourself a rundown and break down the market in reference to technical analysis. What is it that you see historically have happened either in the session, the day before, a week out, to kind of give you an idea of where the market could be headed to. If we have some highs resting above this area here and we're in, let's go back to the higher time frame, a higher base chart. We have some highs resting out to the left-hand side of the chart, which I don't think I have. Yeah, I'm not sure if this is the all-time high or not. I have to go back and look. Sorry about that. I need to clean my charts up. But anyways, please forgive me. But anyways, say we have some highs resting out to the left-hand side of a chart. Then and we're already in bullish mode to the upside, then maybe that's what the market will be trying to aim for or gauge. You can use higher base charts to really, or higher time frame charts to kind of give you an idea where price movement can go to, especially when we're currently looking at what's currently going on, the structure or the environment in the market, and we're bullish right now. It can continue wanting to push higher, and then you have to look out to see some areas where it can test it or maybe aiming for just as well. Now, when it comes to indicators, I primarily like to use the volume profile. It is a great tool. I use it because it gives me, I use like a reference point or not landing point, but a reference point, and means like a GPS, because you hear traders talk about selling at areas of premiums and buying at areas of discounts. That means basically selling the highs and buying the lows. So, and volume is extremely important. Okay, it's extremely important even when we're looking at, in terms of technical analysis, because it's volume that actually. There has to be volume in the market for the market to make price movements either up or down. All right. If there's no no volume, what do we typically see happen in the market? It's moving sideways. It's ranging. Okay. And I'm not saying that no volume at all, but volume can be low, and then the market is just kind of moving sideways. And maybe some people like to say that their algorithms or algos are really just kind of pushing or pulling the market in the case. Maybe there's no major institutions that are involved in trading throughout the session or the day, so we don't see any major impact movements or big moves in the market, and the market just kind of moving sideways, and the algos are just controlling the market. All right, so but with volume profile, I'm looking for I look for clean line setup. So if this was, for example, here, this is on my higher base chart. We can see right here. Let's just mark this as a supply zone. I mean, it's gonna be a demand zone. Now you can't really see it. Let me blow this up. Well, let's see if I can. I'm going to composite right quick. The width of it, histogram width. Let's do this to like 400 for right now. Okay, let's see if it does it. I don't know if it did or not. Go back to 200. Let's see. Don't know if that did anything there. Okay, so I made this a little larger, the volume profile. This is on my higher base chart, and we could draw this as just say a supply. I mean, it's gonna be a demand zone right here. If the market comes back to this area, we're already in bullish mode to the upside, correct? If it comes back to this area, I would be looking to go long. But in reference to the volume profile, I like to buy at an area at the outer edge, like I talk about in many videos, the outer edge of a volume area. So it gives me more confirmation. We already have an imbalance resting back at the zone. We're at the outer edge. We can buy at a discounted area. Excuse me. This is the area of aggressive buying right here. So all these things give me, what I like to see. So then I'm going to use, pair chart or multi-chart confluence technique, which is part of my strategy, and move down to my lower base chart. All right. So let me move down. I'm just going to show you an example here. So we're talking about, this was at 10 o'clock this morning. Let's just go down to that area. 10 o'clock this morning. That's going to mark us. I'll tell you what I'm going to do. I'm going to do this right here. and put this on all charts. Okay, so you can see what I'm talking about. So here's that area right here. Okay, that's off of the higher base chart. Okay, so the market comes back to this area right here. Again, we're down here even on the 12 range chart, which is my entry chart. We're down here at this zone right here. We're at a lower portion of a high volume area. That's why I like to use the GPS as a guide to let me know where I can take interest in buying and selling. Do I also incorporate other indicators? Well, you can see here I have the VWAP right here on my lower time frame 12 range chart. And typically what I like to do is take trades or look for opportunities. Now, I'm not a stickler for keeping my eyes on the VWAP, and that's the volume weighted average price indicator. Okay. So typically when the market gets back to a zone like right here, I like to look for opportunities to go long where the market is above that indicator. Okay. And this indicator here it can shift at any given point. So as this thing is pushing lower, it may start to kind of move to the downside. It all depends what happens when the market kind of gets back to the zone. But more likely, price will be below the VWAP when it gets there. But again, we're at the outer edge of a high volume area on the higher base chart. We already saw where we have aggressive buying, and that was a demand off of a higher base chart. So looking at the higher base chart, my 60 range chart, well, it gets back to the zone. It could be, below the VWAP right there, but that's okay, because if the market breaks back above it, then I'll definitely know that it's still trying to, it's still in bullish mode, and more likely it's going to keep trying to push to the upside. So this right here, you can see that we're above the VWAP, right? If we look at the volume profile, now this is what I classify as a low volume area here, but it's a small area of volume. And the way you want to maybe kind of look at volume profile is that kind of like the peaks and valleys of mountaintops, or the peaks, the valleys, the peaks, the valleys, and then some instances you'll have major peaks and you have bigger valleys. Okay, so this area right here, yes, this is an area of demand, but again, this is an area of low probability zone, and right above us, you need to be very mindful that there are areas of resistance here, but you have to pay attention to what happened with price action. When the market started breaking lower here, did we start to break through and take out any area of structure to the downside? So far, we haven't. So it's a good chance if the market does reject this zone. I'm not saying it will, because this is a low probability zone for me. It could come back and start to test and move all the way back up to the upside and test the high right here if we get the rejection. But again, I'm not swing trading, nor am I taking my trades off of a higher base chart. I love this zone here down here because there's an imbalance resting there. We're at the lower portion of a high volume area. The only thing I don't like is that we're below the VWAP. But again, I'm not a stickler to 100% paying close attention to and 100% incorporating the VWAP into my trading. I try to keep my trading simple without incorporating a bunch of different, I would say, attributes, okay, or indicators in my trading. Just strictly the volume profile is enough for me, because again, the whole idea of selling at a premium and buying at a discount area right here. So hopefully that sums up things in reference to technical analysis, some things that you can actually use. But again, when it comes to technical analysis, all we're really trying to aim for is to grasp an understanding of what happened historically within the market in reference to price, movement wise. Is it to the upside bullish? Is it to the downside? Just trying to get an understanding of areas and levels that it may have broken through, and understanding support and resistance right below or above us, and supply and demand. Okay, we have to incorporate all those things. So it's just just using your keen eye to determine the directional movements of the market, all right, to aid you in setups or trade ideas that you can possibly take, all right. But one of the key indicators that I like to use in my analysis of the market is volume profile. So that's all I have for you guys today in this video here. I appreciate each and every one of you tuning in. I appreciate all the loyal supporters who are part of the Discord community. Again, if you want to join the Discord, please find that link down in the description portion of the video. Again, the information I share within the videos is for just for informational purposes only. This is the way I trade, okay? I'm not forcing this on anyone or telling anyone to follow behind, the way I trade, nor telling anyone to trade exactly the way I do. We always talk about and say whatever works for you, then stick with it as long as it's working, right? But one of the key things you have to understand that consistency and patience pays off. We have tons of traders that have been watched and have watched the videos, spent time, months, possibly even a year or so. I'm not sure how long I've been having these videos running, but if you come onto the Discord, you'll find that there are so many of them that have, for one, they thank me on the daily, and I appreciate that, guys. I really appreciate all the positivity for showing them valuable information that has really transformed their own personal trading, and now they're consistent and profitable in their own trading. If you don't believe me, come over to the Discord and ask. But again, the videos I share here, by not by any means are to persuade anyone to trade the way I do. I just want to share how I do it, the way I trade through my own eyes, the way I see things. Okay, if you're interested in becoming an elite channel supporter or elite channel member, so many people ask me that on the daily, hey, how can I become an elite member? Just click on the join button you see right there. Right here on the video screen here, you'll see a button that says join, or you can find the link down in the description portion of the video right below the Discord link. It says become a member. Make sure you choose, because there's going to be 2 tiers that pop up, and the one you want to choose is the elite channel supporter or elite channel member tier to join and gain additional access to those private videos covering my trade breakdowns, where I go in detail about specific trades, as if you're sitting right next to me, and I'm giving you, running it down through my own mindset, as well as the video playlist. It's a list of videos that I hand selected and I guess pulled out, extracted, and made a link by link series of videos that pretty much cover the core content of how I actually trade. All right, I appreciate everyone. Thank you. I'll see everyone in the next video. Take care.